Welcome everyone to the news with GoldSilverBitcoin.com. Today is the 24th of April and it's 2020. The first story we're going to be going over is called IMF. The Great Lockdown could lead to coordinated global economic policy and debt moratoria. And as always, you can read these stories and more at GoldSilverBitcoin.com. So the story that we wrote begins, the IMF calls the quarantines and social distancing practices to contain the coronavirus pandemic the Great Lockdown. In a recent blog post, the fund discusses the effects. The magnitude and speed of collapse and activity that has followed is unlike anything experienced in our lifetimes, writes Geeta Gopinath for the IMF. This is a crisis like no other, and there is substantial uncertainty about its impact on people's lives and livelihoods. I mean, how much uncertainty can there be when every single small business on the planet has been shut down other than a few liquor stores and some grocery stores? Everyone's had their business taken away from them effectively across the globe. I think it's pretty clear what comes next, and that would be a depression, which they make clear later on in this article. I mean, it's funny because there's only substantial uncertainty about what the effects of the coming depression are, not that what the impact on people's lives and livelihoods are going to be. Across the board, it's going to be dismal. Anyway, end rant. The article states that many countries are facing a health crisis, a financial crisis, and a collapse in commodity prices. Bailout money has been given out to Wall Street and Main Street. And as we've seen in the news, it was much easier for Wall Street, which made billions on distributing the PPP money for small businesses, to get that money. A lot of small businesses were not able to get the funds that was earmarked for small business. Anyway, quote, there is considerable uncertainty about what the economic landscape will look like when we emerge from this lockdown. I mean, uncertainty when they tell us we'll see exactly what's coming. Anyway, assuming the pandemic and containment measures peak in the second quarter globally, the IMF's World Economic Outlook anticipates a negative global growth in 2020 of negative 3%. So this is where they then really cut through all this, quote, uncertainty and make clear what is going to happen. Quote, this makes the Great Lockdown the worst recession since the Great Depression and far worse than the global financial crisis. If things don't basically start lightening up, if the lockdowns are not lifted, then IMF keeps the door open to possible, quote, widespread firm bankruptcies. We're already going to see small businesses going bankrupt. Most of them already have. Extended job losses. Man, 26 million job losses, 15 million at the peak of global financial recession. We've already got extended job losses. And system-wide financial strains. We've seen oil go down to negative zero. We've seen in the silver bullion markets, you're basically not able to get any supply. The loss to global GDP in 2020 and 2021 could be $9 trillion, which is greater than the economies of Japan and Germany combined. Countries with tourism, travel, hospitality, and entertainment-based economies have been hit hard. In Italy, for instance, the north of Italy, where the coronavirus hit particularly hard, that is where 50% of the GDP for Italy rises. And emerging and developing economies must endure unprecedented reversals in capital flows as global risk appetite wanes and currency pressures, while coping with weaker health systems and more limited fiscal space to provide support. So that means they don't have social safety nets. That's why you see the headlines now across the United States, or rather across the media, that countries across the world, poorer economies, are suffering from potential starvation. This makes the Great Lockdown the worst recession since the Great Depression. That is really the crux here. Anyway, emerging and developing economies must endure unprecedented reversals in capital flows as global risk appetite wanes, currency pressures, and coping with the weaker health systems and more limited fiscal space to provide. So it's essentially like a multi-pronged crisis that most nations on the planet are facing. It's unlike anything that's ever been seen before. Ever in the history of mankind, never before have we had a global village that then, by decree, was shut down or locked down. What comes next? I mean, I hear a lot of people discussing their ensembles of algorithms and models about to explain what comes next, but I don't think you could take any economic model and apply it to this situation. That's kind of like translating the grapes of wrath into calculus. I'm here with my dog who might have some opinions. Let's see here. So moving on, quote, for the first time since the Great Depression, both advanced economies and emerging markets and developing economies are in recession. For this year, growth in advanced economies is projected at negative 6.1%. Emerging market and developing economies with normal growth levels well above advanced economies are also projected to have negative growth rates of negative 1% in 2020 and negative 2.2% if you exclude China. Income per capita could fall in 170 countries. These predictions are if unprecedented quantitative easing policies allay the crisis, but what if the pandemic does not recede in the second half of this year and we see longer containment measures, worsening financial conditions, and further breakdowns of global supply chains? Quote, global GDP would fall even further, an additional 3% in 2020 if the pandemic is more protracted this year, while if the pandemic continues into 2021, it may fall next year by an additional 8% compared to our baseline scenario, writes the IMF. New economic measures will need to meet economic policy, including coordinated global monetary policy, according to the way that the IMF is writing about things. Let's see, that means, quote, fiscal stimulus that is coordinated across countries with fiscal space to magnify the benefit for all economies. Moratoria on debt repayments and debt restructuring may need to be continued during the recovery phase, writes the IMF, which has deployed $1 trillion lending to vulnerable countries. So this means they put these countries into debt, and in return, those countries then have to implement the economic medicine that comes down from these institutions like the IMF and World Bank. The IMF says, regardless, we still face uncertainty about what comes next. Quote, commensurate with the scale and speed of the crisis, domestic and international policy responses need to be large, rapidly deployed, and speedily recalibrated as new data becomes available. The courageous actions of doctors and nurses need to be matched by policymakers all over the world so we can jointly overcome the crisis. So I think that the main crux of this article that we've just gone over is this quote right here. This makes the Great Lockdown the worst recession since the Great Depression. It's interesting that they use this term Great Lockdown. So not only are we not calling this quarantine, so that is measures in order to stymie the coronavirus, but rather a political action, the Great Lockdown. It's also singular, which then hints at the global governing nature of this kind of policy. So like it is global governance on display, probably like has never been put on display before. It's never been so kind of obvious. So let's see here. Next up, after this piece, we're going to go into public debt skyrocketing worldwide. And so when we discuss coordinated global policy, we already have coordinated global policy. Nations across the planet put their populations into debt. Oftentimes the global institutions, unelected institutions like the IMF and World Bank. So I think what the IMF is suggesting is that we need even more coordinated global monetary policy, like perhaps a monetary policy that's governed through the Bank of International Settlements, Bank for International Settlements, which is kind of the central bank of central banks. Anyway, public debt skyrockets worldwide. Public debt is skyrocketing as central banks expand their balance sheets to record levels. The amounts being purchased are enormous, and it just tells you how much support is needed when the economy is closed down, said Deutsche Bank's chief economist. Quote, just have a look at how long it took to unwind from the financial crisis of 2008 and 2009. Now we are adding at a pace that is multiples faster. So middle class did not recover. They did not recover from the global financial crisis. So, I mean, it took 10 years, and before they had the chance to recover, then they were kind of blindsided by the Great Lockdown. Group of 7 central banks bought $1.4 trillion of financial assets in March, 5 times as much as the previous monthly record set in April 2009. According to analysts at Morgan Stanley, the Federal Reserve, ECB, the European Central Bank, Bank of Japan, and Bank of England will all expand their balance sheets to $6.8 trillion by the time the injections are over. I've seen this number put at as high as $8 trillion by Bank of America for the U.S. Federal Reserve. The Fed is willing to buy unlimited amounts of U.S. government bonds and mortgage-backed securities, as well as lend trillions to corporations and municipalities through temporary purchases of their obligations. Through this program, public debt has expanded its balance sheet to the tune of $41 billion per day. The Eurozone, Japan, and the UK programs have increased purchasing programs. Canada, New Zealand, and Australia initiated purchasing programs for the first time. Emerging markets are poised to follow suit. Quote, they're all moving in the same direction, said an economist at Bank of America in New York. At some point, unconventional easing stops being unconventional. So that is basically this notion that quantitative easing, which was a kind of novel policy at the time of the global financial recession, has now become the default policy of central banks across the world. So that kind of brings us back to coordinated global economic policy, global governance. Let's see here. Policymakers will soon need to try and keep borrowing costs low. For now, both the Fed and the ECB will continue to ramp up their buying. According to Yoshinori Shigami, a global market strategist for JP Morgan Asset Management Japan. In Tokyo, but they won't get anywhere near Japan's levels, he said. If the market eventually starts calming down, they don't need to force themselves to buy more. Deutsche Bank's chief economist warned, quote, we just have to get used to a new world where central bank balance sheets are so much bigger. Lots of new normals. Okay, so expanding balance sheets, unsound monetary policy, we can kind of see what the result of that is throughout the United States today. We also posted a story, which we'll go over now. It's called Cities and States Need a Bailout and Your Pension is at Risk. Instead of bailing out states at the federal level, Senate Majority Leader Mitch McConnell said he prefers states struggling with high public employee pension costs to declare bankruptcy. Quote, I would certainly be in favor of allowing states to use the bankruptcy route. It saves some cities and there's no good reason for it not to be available. McConnell said that states have gotten themselves into a mess with their pension programs. There's not going to be any desire on the Republican side to bail out state pensions by borrowing money from future generations, he said. House Speaker Nancy Pelosi told Bloomberg Television Wednesday a major package of aid for state and local governments will be agreed upon in the next stimulus legislation considered by Congress. Trump, too, has said that states would need assistance. Quote, I think most Republicans agree, too, and Democrats, Trump said. And that's part of Phase 4. So Phase 4 refers to this multi-phase process of reopening the United States. And in Phase 4, which has not been delineated, I guess that's when money printers paper over the unsound economic base of essentially most of the states in the United States, particularly the large ones on the coasts. McConnell plans to push back against federal bailout of state governments. Quote, I said yesterday we're going to push the pause button here because I think this whole business of additional assistance for state and local governments needs to be thoroughly evaluated. The National Governors Association said states and municipalities will need $500 billion in aid to deal with the coronavirus crisis. McConnell called for ample discussion among Republican senators on how to send aid to state and local governments. Not since the Great Depression has a state defaulted on its debt. During the last recession, only a handful of cities went bankrupt because they raised taxes. So cities raised taxes in order to avoid the bankruptcies. This time around, states and cities are asking Congress to provide aid to make up for the lost taxes due to the lockdown, the Great Lockdown. Governors have requested $500 billion, and cities and counties have asked for $250 billion. So those are kind of the macro stories that I'm looking at recently today. And then this next story is kind of an interesting tidbit. So I look at a lot of the countries worldwide as sort of like laboratories of policy. It's where like policy experiments take place, and experiments, of course, are only conducted by experts. Expert. And I'm curious to look into this one coming out of Turkey. I imagine that the idea here is to perhaps export this model to other nations in order to bring gold that is stored under our mattresses or people's mattresses back into the financial system, back into banking products. So 12 major commercial banks and the Istanbul Gold Refinery embarked upon a project to change people's gold-saving habits. The goal was to dissuade them from hoarding precious metals at home. 100 tons of gold was put back into the financial system, though another 3,000 to 5,000 tons remains under people's mattress. So they basically conducted this project to try to bring gold out from underneath people's mattresses or in their safes at home, and it looks like most people did not buy into it. Quote, from the CEO of Istanbul Gold Refinery. We are aware of the fact that there is around 3,000 to 5,000 tons of gold saved under mattresses, which amounts to an informal economy with a size of $200 to $300 billion. Putting this amount of gold back into circulation could bring solutions to many of the country's financial problems. IAR will continue to work with banks and the government to encourage individuals hold their gold savings in banks. Many people in Turkey have gold, preferring the metal to bank products. The country has one of the lowest private savings rates among major economies. So I think that's referring to that the fewest people hold their savings in the bank because of this tradition of hoarding gold. The Turkish Treasury and Finance Ministry issued gold bonds and certificates for 15,479 kilograms of the precious metal this last week. So as they're trying to lure the gold out from people's homes, they are also creating new paper-based financial products that would appeal to the gold bug. That is these gold bonds and certificates. The ministry collected 8,707 kilograms of gold for bonds and 6,772 kilograms for lease certificates. So, as I stated at the beginning of this kind of segment here, this article, that I think this is an experimental policy that policymakers worldwide will be looking at and keeping track of to perhaps export to other countries. Anyway, this was the news with GoldSilverBitcoin.com. My name is Justin O'Connell. Thanks for tuning in. I recorded this in a park. I wanted to get out. I think I'll probably try this a little bit more often. Thank you for tuning in. Have a great day. Stay safe.